past 30 years when we've had inflation before, past 40 years. Coming out of that, you can be more passive. You can invest in bonds and get 8%, 9%. You can invest in, you can put money in your savings account and get 8, 9%, 10% on your savings. So things like that, people didn't have to take as much risk. And then people could put their money into stocks, long-term stocks, and be able to, accumulate wealth over time. Now we're in an environment where 40 bond portfolio, because bonds are getting killed, stocks are getting killed.
Right.
And you have to be able to be actively engaged in knowing what you're doing. And so it's taking a different type of approach because, you could be wiped out. Your retirement portfolio can be wiped out based off these traditional methods of 60% stocks, 40% bonds. Right now, bonds aren't in a good environment either, and stocks aren't as well. So I would say, as far as easing in, I would say buy things that are cheap. Look at the charts. Look at the 5-year chart. Look at 10-year charts. Like, okay, this is a pretty cheap asset. You want to be able to read balance sheets. Learn like, okay, this company, do they have good financials? Things like that. And also looking at the macro environment. Right now we have high inflation, so what does high inflation benefit? It benefits commodities. So we see oil price go up. It's coming back down, but it's went up quite a bit. Natural gas price went up quite a bit, and everything. So I believe that we're in a commodities bull cycle. As history has showed us, how value stocks, which are a lot of commodities and such, when they underperform, that's when growth stocks are outperforming. Stocks like Shopify, Netflix, stuff like that. But now those stocks are declining, and the value stocks are the ones that benefit from inflation and are the ones that investors are rotating into. So I wouldn't really pay attention to a lot of the growth stocks. You can average into some, but I would not, go all in there.
Big focus on inflation.
Yes.
That's probably the number one search topic happening right now. Inflation, what the Feds are going to do. Tell me, what's your position on the 8.6 rate hike and the word recession, inflation? What do those words mean to you during this time frame?
Yeah, so rate hikes, that's obviously, that means that it's going to be more expensive to borrow. When we're in the bull market and a lot of growth and risk assets, such as Bitcoin and the stocks I mentioned before, that's when it's cheap to borrow. So a lot of these companies that may not produce as much income can borrow a lot more cheap and focus on the growth of the company. Now we're in the phase where you have to have income producing companies. Because you have oil companies aren't losing profits, right? They aren't losing profits. A lot of these other commodities aren't losing profits. So looking at that, so rate hikes affects that, how much you can borrow. And it usually affects the growth sector the most, because a lot of those companies don't have positive cash flow as much as the commodities and such. And then when you're looking at inflation is, they said it was transitory. It's obviously sticking. I don't believe it's going to stay this high for a long time. I believe it's going to be spikes here and there, but it's probably going to remain at maybe 4 or 5%. And I believe the Fed's going to have to adjust their target 2% inflation to maybe 4 or 5%, because just the supply chains, the underinvestment into commodities. For a long time. Commodities went through a big down period, for about a decade, underinvestment and everything. And those are the basic things you need to make, car chip batteries or car batteries or electric vehicle batteries or car chips, computer chips, all those different things. And so you need those commodities. And we underinvested in them for a long time. We also had a lot of globalization, which what that is the world participating in trade together. So like how always, people used to trade gold for silk in China, things like that. So now where we're trading is like we get cheap labor from China and other places, India, and all these other places. But we sacrificed our manufacturing.
Right.
So now we're having these issues with our leaders, whether that's be Russia, whether it be China or whatnot. And now a lot of countries are like, oh snap, like we should have been focused on our own production. We should have been self-sufficient. And it's going to take years for us to get back to that level. So I see inflation, continuing to be high. I mean, because for example, the Shanghai in China, like they went through some extreme lockdowns for their zero COVID policy, right? Those lockdowns backed up their ports. Their ports is one of the biggest in the world, where they drop off shipping containers, they import, export, and that's gonna contribute to more inflation. But it's based off their government's policy. So, looking at things like that, I believe that's going to cause inflation to be high for a longer period of time until we deleverage the debt and until we reduce the money supply, because the money supply that was created during the pandemic is about 40% of the world's money was created during that time. So, Milton Friedman always talks about the more you create of something, the less value it has. So until they start reducing that money supply, inflation is going to be high.
I appreciate you introducing me to Milton Friedman, because I didn't know about him until you shared a video with me. So I learned for a last couple of videos that I watched. Now, you made an important point early on about when you were hit with not realizing that, hey, I didn't have enough savings. This is something I never want to go through again. So you start to get like a laser and focus on what you needed to do. And it's basically a short period of time that you realize, hey, I don't want to feel this no more. One thing that I realized is that, hey, I have to cut consumption down in order to create the savings and investments that I need to in the next couple of months. So this is what I'm doing personally. So what are you doing during this time, during inflation, that you are focusing on with your family to get through this tough time?
Yeah, so for me, I didn't I cut consumption down a little bit, quite a bit. Most of my consumption is, metals, like gold and silver. For a while, I did cut back a lot on that. Because
daily, guys. I remember him giving calls daily about buying silver and gold. So I can definitely attest to that.
Yeah, so that consisted of a lot of my consumption because I was storing purchasing power, right? But right now I'm also like, one of my focuses was like, how do I get more cash? Okay, you have to increase your income in some way or form. Obviously, if you go out and get another job, W-2, you're gonna have to pay more taxes. But if you go out and do a side hustle, a little 1099, you can have more tax write-offs. Right. So it can reduce the burden. And depending on what type of 1099 you implement, that will pretty much determine like what all you can write off, right? So those are some of the things that I really look at and everything. So right now I'm doing that, stacking cash, not buying as much metals, averaging into Bitcoin, obviously, and increasing my income. Right. So you have to increase your income. You have to get out there and hustle. I did Instacart for a while. Eli, he's talked about doing Uber, like just to make extra money. Like you have to make extra money. So you have to get out there and grind to build wealth.
Gotta produce. I was listening to something this morning and they were saying that you have to produce. So I definitely agree with that. And one thing that you've done is monetize your channel on YouTube. Number one, producing some great videos and a value for people to come by to learn. So once again, I'm talking to Darrell Dominic from the Money Level Show. Please check him out on that channel. You're guaranteed to learn something. I guarantee it. So talk about your channel and what's next.
Yeah, so be sure to check the channel out at the Money Level Show on YouTube. I have a lot of interviews, a lot of videos on there for featuring a lot of big investors. I also look at a lot of macro topics. Currently been focusing on the food crisis, on central bank policy, how that's going to affect the markets, and then also just some of the commodities that I'm still investing in. So be sure to come by the channel, check out a lot of the things I have to offer. What's next for me is mostly, I'm focusing on building more subscribers. I've built some solid relationships with some of the guests, such as like Jim Rogers and Rick Rule, to where they're willing to help my channel. So I'm looking at just growing from this point on and potentially becoming a precious metals dealer. So that's what I'm looking at right now. And so I will be announcing that once that's established. So be sure to check out my channel.
Awesome, man. Darrell, thank you so much, man. I appreciate you taking the time out to come meet me here in Silver Springs, a better part of Maryland. I really appreciate that opportunity to come to the channel and speak in person. Guys, tell them where they can find you on other social media sites before we go out.
Yep. So I'm on Twitter at Money Level Show, Instagram at Money Level Show as well, Facebook at The Money Level Show. I'm more active on Twitter. I retweet a lot. There's a thing called FinTwit, which is called Finance Twitter. So be sure to check me out on Twitter as well. Those are some of my other sites. And I started experimenting with TikTok. I uploaded one video so far, but they're mostly going to be like YouTube Shorts, which you can find on my channels.
Awesome, man. Awesome. All right, I want you to share that coin once again.
Oh, yeah.
About
so you got
Eli.
And then you got JT.
There you go. I just want to make sure the Silver Talk is in the house and Eli's here. Next time we'll be meeting, hopefully we'll be down in Miami.
Yes, that would be nice. Huh?
All right, guys. Thank you so much for joining us at JT Coin Rings. All right, Darrell, appreciate it. Talk to you later, my friend.
Peace.